Hello, I'm Frank Holland, anchor of Worldwide Exchange. Thank you for joining us on CNBC.com. On Tuesday, Ferguson Enterprises reported earnings missing on revenue but beating estimates for EPS. The infrastructure, plumbing, and HVAC supplier divides its business into two segments, residential and non-residential. Residential sales, those were flat year over year, while non-residential sales grew 3% year over year. Joining me now to discuss the quarter and more, Ferguson CEO and President Kevin Murphy. Kevin, thanks for joining us.
Thank you for having me, Frank. Great to be with you.
All right, so looking after earnings, stock is moving higher. What were the drivers of this quarter, specifically for the growth in non-residential that includes commercial, civil infrastructure, and in your industrial units?
Yeah, we were really pleased with both the fourth quarter as well as the full year results, getting back for the full year to volume growth, gross margin expansion, which is a reflection of the value we're providing to the construction trades, and then the operating profit performance. And you're right. The non-residential portion of the business was a bit more resilient than residential. And so if you look at our non-residential business, traditionally you would have, call it office, hotel and hospitality, distribution center and warehouse. That's largely been challenged. But what has taken up for that has been what we call large capital projects, projects that are north of $400 million in construction value. And quite frankly, that's been a very bullish sign in non-residential. Data center activity, power generation, underground water and wastewater infrastructure, onshoring and manufacturing. And that's largely taken the place of that traditional commercial work.
So you're mentioning data centers in addition to water supply construction. Is that largely due to the quote-unquote AI trade, or are there some other reasons why people are building that out?
It is. And you look, Frank, at the amount of activity in the data center space, it's like nothing we've seen. And they continue to get larger, and those projects are, quite frankly, very good for us as a company because there's on- and off-site water transmission and distribution up through commercial mechanical piping systems, fire suppression, and even the industrial side from a pipe, valve, and fitting perspective. So those are large projects that set up well for a company like ours that has multiple customer groups that can service those different disciplines. Like I say, water infrastructure, through the interior piping systems.
Right. It sounds like a broader tailwind for industrials that maybe we don't always talk about when it comes to this quote-unquote AI trade. I want to talk to you about some macro factors. We are expecting a rate cut at the next Fed meeting. The decision's coming tomorrow. The question seems to be if it will be a 25 basis point or 50 basis point cut. In your mind, does it matter if it's 25 or 50 basis points? How's that going to impact your business?
I'll leave rate cut decisions to Chairman Powell, but we do anticipate that to be a catalyst for growth, especially in the residential side of our business. If you look at our residential side, we've been in a residential recession for quite some time now. And so as we see rate cuts come into play, certainly it's going to have an effect on new residential construction, particularly single-family residential construction. But it's going to take a little bit of time to come through and come into the system. Additionally, on the repair and remodel side of the world, what we hope to see is that rate cuts will spur on existing home turnover, which is a leading indicator for what we'll see in remodel activity both before and after the sale. Because if we look at our markets over the medium term, especially that residential market, we're underbuilt by 3 to 4 million houses in the U.S. The average housing stock is over 40 years old. So we're bullish on what that can mean for the medium term, and we're investing to take advantage of those tailwinds as we go forward.
So, Kevin, there are some concerns out there. The Fed may actually be behind the curve when it comes to rate cuts in the U.S. economy. It could be on the brink of a major downturn, maybe even a possible recession. You have so many customers through so many industries. You supply so many people, whether it be commercial, residential, non-residential, et cetera. What are you hearing from your customers across all these industries about their demand and their outlook for Q4 and then their outlook for 2025?
I'd couch it, Frank, as cautious optimism. We're still in a challenging macro environment. Like you said, our residential markets and our non-residential markets were down for the year. And as we anticipate rate cuts, that will help to spur on that growth. But if you look at our customers, their cautious optimism in part is driven by the fact that we still are undersupplied from a trade professional perspective. We need more people to enter the trades to get this work done. As I reflected on that housing infrastructure need that we have of 3 to 4 million units, the best way to take care of housing affordability is build more houses. And so we've got to have those trade professionals to help build those houses. And then on the non-res side, it's not just data center activity, it's just not onshoring activity. It's the build out of some of the federal stimulus and infrastructure that we've got. So having the right trade professional network to take care of that is important. And it's our job at Ferguson to make sure that we're adding construction productivity to make their complex projects go better because we were involved.
On the call, you mentioned deflation. I want to talk to you about commodity prices. Which direction are commodity prices moving in, and how is that impacting your business?
That's one of the reasons we were so proud with the revenue performance of the company, because we were battling deflation the whole way. If you look at our business, the $30 billion in revenue that we have, roughly just shy of 15% of that is what we would call commodity-based products. Okay. So think PVC, steel, cast iron, ductile iron, copper tubing. And those have been in deflation for quite some time. In fact, it was a 2% headwind to the revenue growth of the company. That's been happening, like I said, for quite some time. We actually saw the inflationary activity way back in the fall of 2020, which we knew was going to lead into finished goods pricing and overall inflation. And so as we're sat here today, we think the inflation issue has largely been mitigated. And again, we're in deflation that should cause a stabilization in overall prices, including finished goods, as we go forward.
So again, Ferguson reporting earnings today, miss on the top line, but a beat when it came to EPS. Ferguson CEO and President Kevin Murphy, thank you so much for joining us. Stock moving higher today, so congratulations to you on the quarter.